hurdles come down when it comes to a number of issues facing that company, especially when it comes to EVs, deliveries, what's going on in Washington, D.C., change of policy. They're still on a tear.
Yeah, we're going to get into the auto story later this hour. Up next, the morning calls, plus Matt Shea of National Retail Federation breaking down Cyber Monday sales following Black Friday sales. What's next? Happy Tuesday sales. This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
We are still seeing that investors are sitting on the sidelines of this market, mostly institutional investors. And we feel like a bit of a broken record in saying that institutional investors are just neutral. Because you still have institutions sitting on the sideline, it means that short and shallow dips are likely what we get.
That was Cameron Dawson of New Edge Wealth earlier this morning as she was looking ahead to the potential for people to step in and buy. They are stepping in and buying right now. You are seeing a bit of a lift across the board, a reprieve from yesterday. Russell 2000 actually continuing to gain up 0.6% in our early trading, leading the pack, even though what you see in the bond space is an ongoing lift in longer-term yields. This coming despite expectations for a Fed rate cut next week. We do see almost 4.11 on the 10-year yield. Time now for the morning calls. First up, Wells Fargo raising its price target on Casey's General Stores to $625, saying the company looks, quote, poised for a Q2 beat and raise. Those shares lower by about 0.25%. Next up, Truist upgrading Six Flags to buy from hold, but cutting its price target to $23 from $27, citing a new CEO and greater sense of urgency. Six Flags up 4.2% in pre-trading activity. And finally, Guggenheim Securities raising its target at Five Below to $185, maintaining a buy rating, citing meaningful intermediate-term upside potential for people who want to buy gummies. 1.9% decline on those shares. Doesn't it seem like what a Five Below is? It's for kids who are in, junior high school buying gummy candy.
I'm not sure. I don't think I've actually been inside of one, so we're gonna have to do some market research.
Evidently,
someone's got
to give you some deals to potentially get in the door. Sticking with retail, the National Retail Federation forecasting 2025 holiday sales to exceed $1 trillion for the first time. Joining us now, I'm so pleased to say, is Matt Shea, CEO and president of the National Retail Federation. Matt, thank you so much for being with us. First, I just want to get a sense of how much that $1 trillion figure and how much some of the increases that we've seen in sales during this holiday shopping season have really stemmed from just higher prices, not necessarily a greater degree of volume.
Well, good morning. Happy to be with you today to talk about the big holiday weekend on Cyber Tuesday now. But we had a great weekend. We had tens of millions of Americans.
All right, guys, so let's look at the news.
We're going to be releasing
kind of got ourselves into
on our holiday call at 11 o'clock this morning, 11 Eastern. So
short
I think
here.
what we
We're trying to
saw
work
was
our way
retailers
out of.
delivering real value to consumers. And while there have been
So
some
really, the
price
only news we got for
increases,
today,
throughout the system,
the
this
cabinet
whole year,
meeting,
retailers have worked
we got to
very,
watch
very
that
hard
because
to
they're
keep
going to
delivering
talk
value
about
for
this
customers
Venezuela
and
thing,
to
what
avoid
we're really
passing
doing
on
over there,
any price
what the
increases.
plan
So
is, and
we're looking at maybe 1% price increases.
You know, it
on
kind of
food,
gives you a
and really for the
roadmap.
last couple of
These
years, we've
meetings
been
are
seeing on
good.
the good side, flat to down on
But other
inflation.
than
So
that,
there's
that's
real
all we
growth
have.
there
We
with a
just we're at
4% forecast.
8:19.
Our
We got the
forecast,
open at 9:30,
3.7
and
to
then we're going
4.2%.
to make sure
We'll
we
see
watch
real
this
growth
meeting
year,
at
and I think you
11:30.
saw some great deals over the weekend and saw some retailers that were really winning with customers.
So let's talk about this period of discounting.
So right
it
now,
was
I think
Black
we're looking
Friday,
to roll
then it
over.
was Cyber Monday, where actually there are potentially steeper discounts, averaging 31% compared with 28%
Looking to
on Black
roll
Friday.
over here.
Now we're on
Roll
to,
over, Red
you know,
Rover.
let's go teetotaling Tuesday or something. I mean, it seems like it's just continuing in terms of
What
the
else?
sales and the
Let's see.
promotions. Does that indicate that retailers are looking to clear their shelves? So does that indicate that there just is a need to generate eyeballs? Or
All right,
is it
guys,
just
how's
that
everybody
they
doing out
feel
there
like they
today?
want to give a sense of value to their customers?
You still in uranium?
Well, I think there are a couple of things happening here. First of all, I think we begin with inventory
Kind of married to
levels.
this on the
And
CVAL
inventory
now.
levels are in a very good place on a historic basis. So we're about 1.13,
Okay.
Which means we've got a little more
Stochastics
than a
look good
month's
for the
supply,
rollover, so I'm going to give it a couple
month's
more
worth of
candles
sales.
here.
So they're not holding too much inventory. They've got the right inventory in place. I think it's a very competitive retail environment. Consumers are under some pressure at the lower end, but they're still out there spending. And we're on track to have a very good year overall.
Yeah,
probably
60
in the
to
4%
49, yeah.
range for the year.
You want to be above the double
And
top,
what we're seeing
probably,
is
yeah.
consumers are being very deliberate, very
All right,
thoughtful,
we're starting to be okay.
very purposeful. They've
Yep.
got lots of
Yeah, so
information
do I.
at their fingertips.
We're all
They're
right.
really looking
What's your
for
target?
the best deals they
VWAP?
can find, the best
I'm trying to
value
get to the VWAP, 200
based on the
EMA.
things they need and want. So I think what we see is a competitive landscape, inventory levels in a good place. Margins are holding up very well for retailers across the board. And the promotions we've seen have been planned promotions. So there's you know, this is all part of a planned rollout
like
for
any
the holiday
green?
season. And I think thus
Any
far it's
green
going
is a
really
take
well. We're off to a
profit,
great start for
68.30,
the
yeah.
5-day holiday weekend.
Yeah,
here
it's
for
about the
Thanksgiving.
VWAP. I think.
Matt, to Lisa's point, though, maybe we call it Tardy Transaction Tuesday. I am getting nonstop emails this morning about how Cyber Monday has been, quote, extended. And to be
Sent
honest,
us.
I actually took advantage of them very early this morning, something I forgot I wanted to purchase. Are you
think we're
saying
gonna
that
be
is
okay.
all planned and this basically just becomes a discount week? Or does it actually show that these retailers are really desperate to try to get eyeballs and individuals back on their sites?
Well, I think, Anne-Marie, I think one thing we've seen is the holiday season has been extended over the last several
30's
years.
about the
So certainly
VWAP.
since
Yeah,
the
I'm
pandemic,
heading toward the
we've
VWAP
seen
too on
consumers
the
beginning
NQ.
their shopping much earlier than was traditionally the case. And we see retailers delivering those deals all
Yeah.
the way back into the
Yeah,
summer
we're all right.
and throughout the fall.
We just as
So
long as we roll
what
over
we're seeing
here,
now, I
we're
think,
good.
is a continuation of that. They're going to continue to be day by day, week by week, different kinds of promotions, different kinds of rollouts that are going to be designed to attract consumer
But what?
engagement throughout the holiday season. And I think that this has all been a this
Yeah,
is a
think so?
thoughtful
I don't know, man.
series of deliberate sort of promotions that are out there. They're planned. They're responding to what
get us
consumers
over
are
the
looking
NQ.
for.
See
And
what's
I
going
think
on here.
back to the competitive landscape that
Just
we're
tap
operating in.
20 EMA on the NQ.
We're not in the period where every retailer is a winner and every business is going to win the way we saw in 21, 22, 23 even. This is an environment in which it's much more competitive. And so retailers are trying to distinguish themselves in the marketplace,
2%.
deliver that real value. And value
Yeah.
is, I think, more complicated. It's not just price. For some consumers, value is price, but it can be quality, it can be selection, it can be convenience when it comes to fulfillment, delivery. So when consumers say they're looking for value, they're looking for something that makes them feel they got what they paid for. And that Might be a great quality item. That might be an item that gets delivered more quickly than they could get it from another competitor. So I think there's a whole series of things that we use when we say value. We're talking about a series of different kinds of experiences based on the consumer. And again, we'll talk more about this at 11 this morning, but we saw retailers really delivering value through this weekend. The numbers were good. Traffic was good online, in store. So I think we're off to a very healthy holiday season.
Stepping away from the holiday season for a moment, can you give us a sense of how retailers are dealing with tariffs and this potential of IEEPA being struck down? Are they talking about potentially benefiting for the reimbursements that might be needed to be paid back to them if the Supreme Court deems that IEEPA was illegal?
Well, I think what we've seen this year, and again, going back to the pandemic, we've seen for the last 5 years, this great period of disruption, this period of uncertainty, unpredictability, even volatility across the market, things that are outside the control of a retail business or any business for that matter. And so I think as we look forward, retailers, again, are focused on the things they can control, and what they can control is the relationship with their partners, their suppliers. They can be creative and thoughtful about the way they're handling their sourcing, their inventory, their importing, the way they're communicating with customers. Those are all things they can control. What the court does or doesn't do when it finally issues a decision on the tariffs, I think that's something that we can't control, our members can't control, and we'll handle that when we get to it. So I don't think anyone's counting on a result one way or the other. It's what we're looking for: certainty, predictability.
We're on 8:25 Eastern Standard Time.
Relationships in the supply chain, and the court will make a decision, and we'll certainly go from there based on what the court decides.
Matt Shea of the National Retail Federation, thank you so much for being with us. And I have to say, Anne-Marie, you get a gold medal. Tardy transaction Tuesday. That's absolutely brilliant.
It feels like it's for that person that maybe did want to buy something and then was just like, I'll wait.
We're just waiting into the open here, looking to drift down.
I'll be fair, they got me
on drift down, touch the View app.
Well, I will say that the gummy selection definitely on fire over at Five Below. Thanksgiving Transition Tuesday, Tinsel Tuesday, Tipsy Tuesday. I mean, we really could go further on this. I really think you have something here.
It's becoming an entire week. But to Matt's point, he says that this is all deliberate.
Yeah, Middle Earth incoming.
Maybe are.
Yeah.
Actually, but maybe for
Need a little bit of that Middle
maybe
Earth
they're going to see how much they decided to spend for the holiday season on Friday and throughout the weekend on Monday. So then they still continue those offers throughout the week. But the fact that I think they're still trying to find those eyeballs and get you back to their website says that things are not as rosy potentially as they seem, and they have to really fight for consumer attention.
Well, we'll carry that conversation forward. Just how clean of a read can we get on the consumer from some of these retail earnings, and frankly from the other peripheral data that we are getting. Coming up, Lindsay Pieggs of Stifel warning that further Fed policy easing could fuel pricing pressures. Plus, Danny Berger with your morning movers. Warner Brothers Discovery rising after Netflix offers cash.
They drop some news on LIDR here. That would be nice. See what we got for news drop. What are we talking about this morning? GPY EU snaps 3-day losing streak. Yeah, who was watching? It was that new guy that was watching the won, right? The Japanese yen. The yen, not the won. Interesting. Yeah. Bowman awarded. Not really, it's just, it's nothing. It's just video, open source, AI that helps. Huh. Seems like a pretty blah day. Yeah, I know. Fuck me, man. Here we go. Blah, blah, blah. Come on.
It's the countdown to the market open as we bring you the first trades across Europe.
I'm gonna wear myself out before we even get to the open here.
The big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television.
All right, guys. How's everyone doing out there? Anyone trade Asia or Europe?
Multi-trillion-dollar industry.
Got myself in a little conundrum right now.
Like no one else. ETF IQ only.
Looking to roll over. Stochastics are looking like it's going to bring this right through. Stochastics are looking pretty.
Capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Did not mean to sell Anne-Marie on Five Below, but here she is lost in an absolute. Well, I mean, if you have kids, then that's typically what happens. I'm not selling them. I'm just saying that this is sort of a good rainy day activity. Right now, we're looking at other rainy day activities because it is a rainy day here in New York City for the Northeasterner. Up 0.3%, not necessarily so dire or dismal in the future space. Higher across the board, led by actually the Russell 2000. Futures up 0.6%. NASDAQ up 0.4% in the bond space. Curious to see that there is not the participation in the rally. Yields up across the board. 10-year yields 4.11 after yesterday climbing 7 basis points at the long end. 30-year yields up just 2 basis points. A bigger move in the belly there, and a real question about what is driving it. Is it a question of potentially tariffs? Is it a question of the Bank of Japan? And in the currency space, pretty much quiet across the board. A little bit of maybe euro strength.
NQ looks weaker. Yeah, it does. It looks way weaker. I think the
Gardner.
NQ is going to lead this.
So one of the stocks we're going to keep talking about this morning is
You got a fair value gap you got to get through on the
Reporting
ES.
suggests that we're looking at second round bids for the company. All the players that were there are still participating in it. All eyes on Netflix with offering a mostly cash bid. We also are expecting something of a $30 bid. At least that's what Warner Brothers Discovery wants to see. Reportedly, shares currently at $24.22. Elsewhere, Boeing seems to be perking up this morning. Some headlines coming out of the UBS Industrial Conference where their CFO was speaking, saying that Boeing's recovery is in full mode. He did cite
Got
some
that
weaker
fair value
sales, or at
gap
least
up there. You got to
a little
work
bit of a
through.
lightness
Let's see if
when
we
it
can
comes to
drill through
November,
that
but
real
looking
quick.
ahead to 2026,
Get
shares
rid of
up
that.
3.5%. Finally, ending things with a little bit of sell side action. That is on Six Flags. Truist upgrading the stock from a hold to a buy. It's been a struggle for Six Flags. They have activist investors swirling around. They put in a new CEO, and according to Truist, that is the key for them. They say that there's a new sense of urgency to get rid of the parks that are underperforming, focus on the core. So again, those shares up.
Drill, baby, drill.
Thank you so much, Danny. Meanwhile, Amazon's AWS reInvent is 2025 is underway in Las Vegas this week, with the tech giant unveiling product news and announcements. Bloomberg's Ed Ludlow joins us now. And Ed, it is really interesting to be tracking this event at a time where there's so many questions around what the new innovation is going to be for artificial intelligence, who the leaders are going to be. What's your sense of what some of these announcements could look like?
Yeah, there's pressure on Amazon because AWS is the number one.
NQ's looking way weak
in terms of scale, hosting, infrastructure. But is it the number one in AI? That's all that anyone really cares about. And that's multifaceted. Is it number one in terms of the models that it offers? Is it number one in terms of the performance of its own chip? And so far, the announcements that they have made, which are few and far between, have focused on the model that they've had out for a year, which is their own. It's called Nova. It's a foundation model. and the agentic AI that's built on top of it. You know, Amazon Web Services is a place where there are loads of different tools, and the complaint from
Ed
industry
Ludlow's
has
in
been, no matter
love
how
with AI.
price competitive it is, it's quite confusing to use.
All right, we're
And
working about
if you look at
8:30,
what's
guys.
coming from OpenAI,
Looking for a
Google,
rollover
looking
into the
at Gemini, they're
VWAP
just
before the
one-stop kind of
open.
shops. And so, you know, when we get the keynote later this morning, 11 a.m. Eastern, you expect some fighting talk for Amazon to say, actually, we've got to act together. This is what you can do if you want to build with AI on our cloud.
Ed, just a quick note here on OpenAI and this question of competition, because they also feel like they are somewhat not behind, but facing increased competition from Alphabet's Gemini. How much
That
are
20
you
EMA
feeling like
turns
this
into
is a
resistance,
healthy
we're in good
phenomenon
shape.
from the
New
industry, and how
candle
much do you feel
opens.
like this is cannibalization?
This
The
candle
strongest
can
hands are gonna
close
win?
below the 50, then
Yeah, it's certainly timely. You know, the
I got warm
reports
and
that Sam
fuzzies.
Altman's called Code Red and basically wants OpenAI to focus just on ChatGPT, highly relevant to what's happening here, right? AWS has a $38 billion deal with OpenAI, but that's for NVIDIA chips. That brings into question if OpenAI has overextended itself on its capital commitments for capacity. Amazon has historically been a place where they host other people's models, but they want to sell their own. OpenAI wants a foothold on the enterprise, so it's looking to Amazon. And in the background, you have Google and Google's TPU, the performance of its own A6 chip. Amazon very likely to talk about their own in-house silicon, but they don't really have anyone to use it beyond Anthropic, one single anchor investment. You use the word cannibalization. You know, the question is still not necessarily on bubble, but overextended. And are these model labs good for the money that they've committed to the hyperscalers who themselves want to be leaders in the field of foundation models and building cool software on top of it? All fair questions to ask throughout the course of the day.
And I'm sure that you'll be asking them. Ed Ludlow there, he is going to be speaking with the CEO of AWS later today, I believe at 3:10 p.m.
All right,
Eastern
how's everyone
time.
doing
AI
out there
in the
this
US
morning?
economy. Wei Li of BlackRock talking about how the micro is turning into macro.
There is no such a thing as neutral stance anymore. So if we look at the large numbers of CapEx forecast, credible forecast takes us to $8 trillion by the end of this decade. The current forecast for big tech companies in terms of incremental revenue,
Come on, break the 50. If we break the 50, oh, we got a red forecast cloud
Increasingly, the AI
on the
story
NQ.
is becoming the economic
We can break
story.
the 50.
Bloomberg's Enda Curran joins us now. Yesterday,
EMA,
we saw
we're
a
in good shape.
inflationary ISM manufacturing report, which kind of flies in the face of this huge outgrowth of investment that so many people are expecting from artificial intelligence. At what point are you able to track, or are we sort of at the behest of the AI developments, especially at a time when we don't have other economic data?
I know the
Well,
ES looks a little more tenacious
Accounting for the bulk of
than the
GDP
NQ right
growth
now.
this year, Lisa. It's certainly driving activity, as you point out, in the broader manufacturing sector, remaining in the doldrums. That ISM indicator yesterday.
Trade of
showed 9 months of
Apex and
contraction,
trading view. Yeah, go ahead. Hey,
because of the uncertainty
Crimson.
over trade
What's your
policy, because of
question?
weak demand. So you look around, where is the activity coming from? And it is that AI build out, it is the investment, it is the data center story. But in terms of how sustainable that will be for the economy, what legacy of employment that will leave once the construction phase is over, and of course, what impact the AI boom is having on productivity, all of that is very uncertain right now. It's very hard to measure. It is boosting headline aggregate data, we know that, but we also hear a lot of stories, just like your previous guest making the point about the retail story.
Go ahead, Crimson. I'm here, man, if you're
Because
typing.
that's concentrated in terms of upper income households. So yes, we're getting a good gloss on the economy from the AI story, but there's a lot of uncertainty in terms of what's happening in the other pockets of the economy.
I don't use Trade of 8 or Trading View. I use Ninja Trader. And I don't use Apex. I had a bad experience with Apex.
Lisa. I mean, we have ADP
Is
coming in,
Rocks here?
tomorrow.
I've been wanting to catch up with
Consensus
Rocks.
5,000. That's fairly tepid in itself. If that
He
was
hasn't
to be a
been here
negative number,
since vacation.
it would just back up the idea that the labour market is weak.
Neither
That's
is
all
Spiznik.
the official sector has to go on at the moment, and Wall Street analysts have to go on, because we don't have that flow of the BLS jobs data or the CPI data. That said, though, it does feel like we're at a point where the Fed officials have probably made up their mind. You're either more worried about inflation, and that's where your focus is.
Hey,
right
fire
now,
your
deciding
question,
that
Crimson.
The labour market is what it is, or you're more concerned about the job story. And by all
Just got
accounts, the hints that we had heading into the blackout week,
But a little clenched here, hoping just for a quick
it
drop.
sounded like some of those more prominent Fed officials were more worried about jobs, and that's why the markets
of course, are now pricing for that Fed rate cut next week. But without the data, it's going to be a very hard Fed meeting to call.
And Curran, thank you so much for being with us, as always. Sticking with the Fed ahead of next week's meeting, Lindsay Piegza of Stifel, clearly in the inflation camp of worries, writing, while inflation held steady in September, the lack of downward improvement from a still elevated level raises concerns that any further policy easing could risk an acceleration of price pressures. Lindsay joins us now. Lindsay, thank you so much for being with us. I want to start there. Why are you still concerned about inflation worries being the preeminent concern at a time when it seems like the Fed has moved more to the employment side of the equation?
If I want to use TradingView to trade on, use an Apex funded account and use Tradevate as the broker, is there anything I should know, or is the process straightforward? I looked at the Apex accounts. Well, first of all, I don't use Apex. Shit, man. I don't use Apex and I don't use Tradevate. I had a bad experience with Apex, so I don't use them anymore.
It does suggest that the Fed might have
I've always used NinjaTrader with, and how that would work is, I believe Tradevate. Yeah, we got Shrek.
Particularly now, there are a number of upside risks as we look out to the end of the year and turn the calendar page into 2026. So now is not the time to entirely.
I guess I should have pulled those contracts off down there.
Lindsay, do you think that the Fed has enough information and data, given what happened with the government shutdown, to make a decision next week?
I think the Fed has a good read on what's happening in terms of the underlying momentum in terms of
that was a
cost
pretty
pressures.
strong
Again,
one
we haven't
on
seen necessarily all of the data move to the upside, but we haven't seen any indications of a material downward momentum in inflation. And
So I use NinjaTrader. So Tradevate, they use Rhythmic, and Rhythmic will connect to Tradevate, and that's where you'll take your trades, I believe. And a lot of people use Tradevate. I just never have. I've just always used NinjaTrader, and I don't really have a reason other than that's just what I've always used because that's what I started using when I first started trading. I had a bad experience with Apex. Doesn't mean that they're not bad now, but I got ghost traded out of 3 funded accounts right before my payouts were due. And
not necessarily a dovish pause. I think we're looking for more of a neutral pause. I think the Fed at this point.
Yeah, I mean that'll be fine. Oh shit, you motherfucker!
Those that have that lingering fear of price pressures and those that are facing this emerging concern.
Stop filled.
Labor market front. So I do think the Fed could very clearly articulate a neutral pause, push policy to the sidelines, say we're not going to make any unnecessary movements until we have a better read on prices and the labor market, given
Order filled.
So, both sides of the Fed's dual mandate.
Lindsay, when you say inflation pressures are still in the system, there is a real question of what those inflation pressures look like. 3%, a lot of people say we can handle. 4%, not so much. How much are you seeing an actual unmooring of inflation expectations in a way that feels unsustainable and unduly punitive?
Yeah, that's fine if you want to use Apex. You use Tradevate, or you use Rhythmic through Tradevate or NinjaTrader, and that's how they work.
Willing to tolerate that longer term, but my concern is these upside pressures
Order filled.
down the pipeline. Should we see a stronger than expected growth profile at year end?
Are you out? Are you out uranium?
As we now enter this key holiday
I'm on an eval, man. I bought eval packs.
Should businesses now begin to pass through more of those cost increases to the end consumer that were previously absorbed into the bottom line?
Yeah, I'm still
now
into.
That inventories have been drawn down significantly.
But I don't know what's going on over at Apex anymore. I don't think anyone here uses Apex.
So it's not necessarily where we
So just know that.
But the risk to prices,
I'm using the indicator on TradingView is what I'm using and doing the trading on my phone. Now I've been frustrated switching apps. Yeah, it's really hard to do on your phone, man. I'm not sure that I would recommend it. It's really hard to do on your phone.
And questions around just how much wages are not keeping pace at the lower end.
Well, wages still are relatively positive. We see about this 4%.
There's a lot that can go wrong.
A lot of that growth has
How long have you been
isolated
trading
to the
for,
upper end of the
Crimson?
income spectrum, fueling a lot of the activity on the retail side in the upper echelon. And so we don't see necessarily this broad.
I'm guessing there's no takebacks on this trade.
When we talk about the consumer being solid, we do have to be somewhat careful painting with a broad brush because a lot of that momentum has come from this underlying increase in asset valuations, fueling trillions
4
and
months.
tens of
Okay.
trillions of dollars.
Have you been trying to
as well.
trade on your
But again,
phone the
that's
whole
very
time?
much
Trade
isolated to the
futures?
middle or the upper end of the
Like, what do you have? Like an ATM strategy that you're using, or how's that going?
Participation in the equity market, which those at the lower end, statistically speaking, are less likely to own property or have a stake in the equity market. So we do see, again, not necessarily the Fed's ability to completely ameliorate this K-shaped recovery, but there is a role of monetary policy, but a delicate one. We have to make sure that we're attentive to both that labor market and the price data components of that recovery.
Lindsay Bieggs, thank you so much for being with us this morning. Right now, let's get you an update on the stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Cloud computing provider Vultr is making a major bet on affordable AI infrastructure. The AMD company announcing plans to spend more than $1 billion building a massive chip cluster in Springfield, Ohio. The facility will use AMD's advanced AI processors to offer computing power at significantly lower rates than major tech giants. Meanwhile, the U.S. Commerce Department agreeing to invest as much as $150 million in X-Lite, a chip technology startup. It's part of an effort to create more domestic chip-making capabilities and help X-Lite construct a laser prototype. X-Lite's executive chairman, Pat Gelsinger, yes, formerly Intel CEO, saying it is a once-in-a-generation opportunity. And the Northeast is preparing for its first major
I work at a
snowstorm of the
landscaping
season.
company,
Some
so I
parts of
trade
northern
on my
New
phone
England
after
could
New
see
York
as much as
opened.
10
Okay,
inches
that's
of
cool.
snow. The storm could also drop
How
up
has the
to 4
software
inches
been
of
working
snow
for
in
you?
Chicago,
You've
where
been
a
using
record
Apex the whole
8.4
time to
inches
do it,
fell
or?
at O'Hare International Airport. That's Bloomberg Brief, Lisa.
Thank you so much, Yahira. And I feel for any travelers who are sitting in limbo as a result of those snowstorms. Up next, setting you up for the day.
Target filled.
Tom Narayan of RBC Capital
Yeah, it's going to
Markets.
be
Michael
easier
Burry
on your
is
PC
betting
doing
against
this.
Elon Musk and Tesla, and as we do get some auto numbers throughout the day today. This is Bloomberg Surveillance.
So it completely took everything out. All right, I'm about to rage trade now. This is why I'm not using my PAs. All right, we're going to close this.
Order filled. Order filled.
7, 69. All right, let me get back in. I started on Take Profit Trader on Tradeovate on my PC, then my phone was useless switching apps, so it wouldn't stay logged in. It was crap.
The key
Okay.
issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know,
Weather wealth charts on Apex because I needed an app that.
Botswana, the government of the Republic
Okay.
of Botswana holds 15.
Is that
We are
Apex
resolute now,
on?
and
Okay.
we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number.
Yeah, I mean, I've never tried to do this on my phone. I have a pretty big setup here.
Parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
Order filled.
Bringing you insight on the people, companies, and trends.
I know a lot of guys have tried doing exactly what you're doing.
Very big things.
I don't know the secret formula yet to be able to do this on your phone while you're actually working. You know, you gotta, do you have like an auto entry type of thing?
Only on Bloomberg.
Like, how do you enter your trades? Hey, Bird and Pirate, how you doing?
Asia's biggest tech news and innovation.
Trying to get myself out of a shit show here.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Yeah, we're finally getting the drill here, and it flattened my trade on me, you know.
Stop filled.
Coming into the second day of December with a little bit better tone than we saw yesterday. Certainly a lift at the S&P, up about 0.3% now.
Order filled.
To see the yield climb on the 10-year. This is very much a focus, especially after the Bank of Japan decision, or likely decision to hike rates, as we heard the signal yesterday. A real question of the carryover with 411 almost on the 10-year in the United States, counting down to the opening bell. Here's a trading diary for the week ahead this morning. U.S. envoy Steve Witkoff meeting with Russian President Vladimir Putin in Moscow. At 11:30 a.m. Eastern, President Trump hosting a cabinet meeting, 2 p.m. Eastern. The president set to make an announcement, and after the closing bell, we do get earnings from CrowdStrike. On Wednesday, tomorrow, we get ISM services. On Friday, we get core PCE data. Sounds exciting. It's from September. Don't get too excited. Counting down to the opening bell. Investor Michael Burry making another big call against the market. The big short investor calling Tesla shares ridiculously overvalued. Tom Narayan covers Tesla and other automakers for RBC and joins us now. Tom, great to see you. Thank you for being with us.
All right, here we go finally. And I should be in with 6 contracts right now.
Of the larger auto space and how difficult it is to get a handle.
This is the thing about trend line breaks with indicators as confluence. Okay.
And post-tariff realization.
So you like the trend lines and EMAs.
Yeah, I think what you're noticing more and more is the strength.
Do you have like an ATM that triggers and takes profit and kind of works as you go? You know what I'm talking about?
Itself with auto sales, which have actually been stronger than what a lot of people
Order
expected.
filled.
We did our own work to actually show that there's about a 6 to 7 million vehicle deficit of cars that were never purchased because of the pandemic. And, you know, in the U.S., in a lot of states, you have to have a car. It's as simple as that. How do you get to work? And if you can afford the car, you will buy it. And so, you know, at the beginning of the year, I think folks were looking at something like a 15 million vehicle SAR for 2025. It's looking like it's probably going to be a 16.2, 16.3 million number. So, yes, sure, things are slowing down a little bit. There's been some pricing
Order submitted.
To offset some tariffs lately.
All right, let's see if I can set this up
OEMs, but
get out of this.
If you take a step back, there is some real strength of the economy.
Yeah.
Unemployment is very low. We'll probably have another rate cut, right, later this year, probably more next year. And then tariff resolution in 2026, especially with USMCA. So given that backdrop,
we need this EMA cross right now is what we need too.
So this goes to who's going to win, right? Is it the U.S. auto manufacturers? Is it the electric vehicle manufacturers? Or is it, as we have seen of late, a real shift back to hybrid and, frankly, trucks and away from the Elon Musk's Teslas of the world?
See what I mean? It just flattened my position.
Yeah, I mean, let's just look at cars specifically or autos specifically. I would agree with that. It's
Order.
ICE cars.
Order filled.
Definitely, perhaps there's some room. The humanoid market. And yes, look, it's very early to tell where Tesla's going to be in that. So I look at Tesla the same way on humanoids as I do on robotaxi, which is I look at the top down. I think it's a huge market opportunity, both humanoids and robotaxi. And I'm assuming actually very small penetration levels for Tesla on humanoids, only 5% of that market. It's a big opportunity, this humanoid market. I don't think the investor base has caught up with reality. Certainly folks like me are new to the game. When you talk to the experts in robotics, as we have recently, you realize why there's such a big market opportunity. And, that tends to move this stock, right? It's a narrative stock.
The fuck?
As long as we don't have negative data points, and this is like a 10, 15-year horizon, what is the negative catalyst here to kind of put some shade on the stock? So right now we're looking at that perspective, and we like the stock.
So what do you make of Michael Burry's call then, when he says Tesla is ridiculously overvalued? Would you just tell him that you're looking at the future and what's going on with not just robotaxi, but potentially what happens with humanoids?
Yeah, I mean, we don't know is the answer, right? I mean, we don't know who's going to win. What do we know about humanoids? We know there's going to be a lot of them. We know that's probably going to be decades from now. We know the form factor will probably be humanoid, and we know Tesla is one of the leaders. So, from that basis, I do think there's enough inertia that should support the stock. Maybe in 10 years or 5 years, we look back and maybe I was wrong, But I just think it's too early to tell, right? I mean, I think the data that Michael Burry had during the housing crisis was real data, right? I don't think we have actual real life data to show that humanoids won't happen or Tesla won't be a big piece of that, or in the robotaxi side either, right? So I'm following what the data that we have presenting before us today is, and I like the odds that Tesla has to capture it, but ultimately, none of us really know the answer.
I'm just ChatGPTing or Geminiing how long it's going to take for humanoid robots to do our chores, and they say 5 to 15 years. So it seems like.
All right, guys, I can't get the chat to come back up. I don't even know what the fuck's going on.
Tom Narayan, thank you so much for taking the time of RBC. It does seem like that is the next step, and it raises this issue.
OBS crashed. I'm trying to get everything back up right
now. That is
now.
going to be the source of jobs on the heels of AI for a long time. Or maybe 5 years before maybe there's some other alternatives out there.
But he gives this point that a lot of individuals who are very bullish on Tesla give. It's not about EV. Sure, that's how he made the name and got into the industry, but it's about the future of what Elon Musk views the world is going to be. And humanoids are becoming a lot more popular, at least in the rhetoric, when people want to talk about. And to be honest, 5-10 years is not that far. That's near term, I think, if you look into the future. It's not 20, 30, 50 years.
Do you think that it's subliminal signaling that we're talking about humanoids on Jobs Week when we're not getting
jobs
reports? So there you go. Maybe this is some deep
BLS needs humanoids
message, evidently. Coming up tomorrow, we're going to be talking less about that, more about what's going on right now as people head into 2026. Lori Heidel of State Street, former Kansas City Fed President Thomas Honig, Matt Stuckey of Northwestern Mutual, and Nancy Lazar of Piper Sandler. This was Bloomberg Surveillance. Good morning.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The game here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
So frustrating, man.
I'm Alex Rodriguez.
This is so frustrating.
And I'm Jason Kelly. And we're back with another season of The Deal with athletes and entrepreneurs.
All right, guys, I got to stop the stream. I can't get the chat to come back up. OBS crashed. Give me a minute.